Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Crawley.
All right, testing. 1, 2, 3. All right, we're good. I was recording this. I was like 7 minutes into the podcast, and I realized I didn't press record. All that brilliance lost into the ether. Such a shame. But it's all right, I can repeat it. Here on the Friday edition of Wilmington Mortgage, I am the aforementioned host of this podcast, Tyler Crawley, of course, loan officer at Town Bank Mortgage, right here in Wilmington, North Carolina, where we break down the top stories impacting mortgage rates every single weekday, unless I'm sick, on vacation, or it's the Azalea Festival. One of those three. But we actually do have something to talk about today. It's actually like a domestic economic report that actually impacts one of the sectors of the economy that could impact rates. It's nice to be able to say that. Not a big one. And I do also want to talk about, there was a great piece by Joseph Sternberg in the Wall Street Journal about Kevin Warsh and what he may do at the Fed that I thought was pretty reassuring. So we're going to get to that. But I do want to talk about the big news late Thursday were two major tech companies, Meta, a.k.a. Facebook, and Instagram, and Microsoft, both announcing reductions in their workforce, but different how they're doing it. So Microsoft is offering buyouts to 7% of the workforce. I'm assuming those are going to be more senior people and kind of pushing them on the ice. The ice, what is it? The ice, what do they call it? Shelf, pushing them out to sea. Time to retire. Meta is not doing that. Meta is laying off 8,000 people, about 10% of their workforce. So still shaving their labor, but different ways that they are handling it. Layoffs and then kind of pushing out other people with early retirement and buyouts. This is not the first time we've seen this. We've seen other high-profile layoffs. But what's interesting is it is yet to filter into sort of this national labor market data that we track. So you're still seeing, job creation. It's not great. I mean, it's not great job creation, but job creation nonetheless. We're not seeing, losses every month. And we're kind of keeping up with the rate of replacements with regards to people entering the job force. So not a lot of hiring, but like I said, we're still seeing it's in the green. And then jobless claims every week are still like historically low. If you go and look at the jobless claims chart, there's a huge distortion in 2020. It's the biggest spike ever in the history of them calculated since like 47 or something. This giant spike in 2020. But if you remove that, what we're seeing, we're still like at historic lows. I mean, even if you go back to like the booming 90s, there were 400,000 jobless claims back then. And now we're at what, today? On Thursday, 214,000, up 6,000. That is the second highest level in the past 7 weeks. Economists were expecting a slightly bigger jump to 218. But 214 is in a country of 350 million is not very big. Historically, pretty close to, pretty low. And then continuing claims, which have been falling for the last, year or so, they did increase by about 12,000. So we're at 1.82 million for the week ending April the 11th. And it did mark the second straight increase, but it's still close to the lowest levels that we've seen for the last 2 years. So we're still not really seeing any major problems in the labor market that would justify the Fed having to do anything. So the Fed is meeting next week. It will be, Jerome Powell his last official meeting as chair. He could still stay on, as we all know, as pro tem if Tillis does not let his nomination get out of the banking committee. So this is his last official meeting, but he could be the pro tem chair at the next meeting if they cannot get Kevin Warsh's nomination through the committee because Trump has the votes for the full Senate vote, even with Tillis saying he's not going to do it. I know Murkowski was also, I think, against it, but I don't know if she's ever actually came out and said she was definitely against it. But I think they would need 4 Republicans to abstain, because I think 3 still gives J.D. Vance the tie. So I think Trump has the votes for the full 4, but he can't get it out of committee if Tillis doesn't allow it. So there could be another meeting with Powell at the head of it. But my point is, there's nothing that's going to give the Fed any reason to change anything. So, Powell's already come out and said they're not worried about these short-term oil shocks. Monetary policy is not set up to deal with these short-term shocks. They can't act fast enough. And by the time they do hit the economy, it could be over. And so if it turns into a long-term issue, that's a different story. But for this upcoming meeting, they're not going to raise rates because of oil prices. Not yet. And so without something on the other side of that dual mandate, which would be employment, inflation, they are worried about inflation a little bit still. But without a reason on the employment side, there's no reason to cut rates either. So another meeting with no rate cut. And even with these big layoffs, you're going to hear people say, look at these big layoffs, we got to do something, but it's still not filtering through. We'll see next week if this makes a dent in the jobless claims next week. We will see. But that was the big report. We do have Japanese inflation, which is always important to watch because of the fact that Japan is the largest holder of, the government and investors over there are the biggest foreign holder of U.S. debt, obviously an issue. But that doesn't come out until after I'm recording this. So we probably will talk about it on Tuesday's show, more than likely. All right, let's talk about this article I saw in the Wall Street Journal, op-ed by Joseph Sternberg about Kevin Warsh. I thought it was pretty good. A lot of people are going after Kevin Warsh, saying he's going to be a puppet of Trump. And listen, I get it. Here's the thing. As someone like myself who is a Trump skeptic, always has been, sometimes to my own detriment, the one thing that I will give him credit for is his picks for these financial positions, economic positions, are pretty good. I would say damn good. If you look at his first term, he appointed Jerome Powell, who I think is going to go down in history as one of the best Fed chairs, and what he had to deal with. With COVID and everything else, just amazing. And then working with Powell during that first term to save the economy from COVID was Steve Mnuchin, who I think was a good Treasury Secretary. And this is all evidenced in $1 Trillion Triage by Nick Timiraos. And so those were good picks. And then, Kevin Warsh, I think, is a good pick. And we got Scott Bessent, who's the Treasury Secretary now. I think he's great. And so it's funny that Trump, he does make horrible picks in other areas. I'm not going to give you examples. I think we all know who. But, I'm not a huge fan of his commerce. So I don't know if Wilbur Ross was that good. And who's the guy now? The beard guy, Howard Lutnick. I don't know if he's very good. I'm not a huge fan of him either. But Treasury Secretary and Fed chairs, I think Trump is betting 1,000. And I think Warsh is going to be good as well. And I always tell people, he does make good picks when it comes to these positions. But here's what Sternberg had to say. So he said, he was getting beat up, especially by, I think, Warren, that he's going to be a puppet. I saw Paul Krugman, I think, also called him a sock puppet. He was going to be a sock puppet of Trump. Sternberg says this is insulting to Warsh, whose public career ought to instill confidence that he can think for himself. It's also disingenuous on the part of his critics, particularly Senate Democrat Elizabeth Warren, who spent much of her own free time in 22, 23, and 24 writing open letters to Chairman Jerome Powell to demand easier monetary policy for political purposes such as facilitating financing of renewable energy projects and to help, Joe Biden and the Democrats. So he's not wrong. They're against the Fed being political unless they're the ones making it political. Sternberg argues that you had to bear in mind that the underlying question here isn't whether the Fed decision-making should be political. It already is. The central bank handed a dual price stability and full employment mandate by Congress, which is a political entity. How much employment and how much inflation voters will tolerate fundamentally are political questions. That is true. And over time, the Fed has made itself more political. The central bank's propensity for buying and holding large quantity of assets drags it into fiscal arguments where it doesn't belong. For instance, as Mr. Warsh often points out, the question instead is how to manage the Fed's inevitable forays into political, in quotes, decision-making in ways that will maintain the public's confidence in such a powerful institution. And he actually argues that Warsh's vision is pretty good. So he says his insistence of the Fed stay in its relatively narrow lane with a smaller balance sheet, hence also his ambivalence towards forward guidance, the speeches, policy statements, and other pronouncements by the Fed officials attempt to steer markets. He added a new layer on Tuesday, that's Warsh. Sternberg says the Fed also requires a degree of intellectual humility. Warsh promised to undertake a major data project regarding inflation soon after taking office, if confirmed. This is an important point because, and this is also a political statement, is that I remember, it's fun to watch because when, the Democrats are in control of Washington and reports come out, the Republicans go, I don't believe these reports. These aren't true. No, inflation's higher than that. Jobs are not this good. These reports aren't real. And then things switch. And then the Democrats are like, nah, these reports aren't real. Inflation's higher than this. These job numbers are not accurate. And so you do have like a political component of people not believing the reports, but there's also people who always don't believe the reports. And so I think doing something about that and trying to bring about more confidence in these reports, I think would definitely be, I don't know how you do it, but it would definitely be a good thing. And then I also like that Warsh, as Sternberg notes, has a desire for messier policy setting meetings. And, we've talked about this before. I think Nick Timmeros has written about this, where he'll point out where the Fed will all vote in favor of a rate cut, but then you'll look at their forward guidance, the dot plots, and they'll actually say in the dot plot that they weren't for that rate cut. Like in the way that they don't have it penciled in. And it's sort of like a silent protest. And what Warsh is saying is, no, say it. Like we should have people disagreeing. Sternberg points out that between September 2005 and September 2024, not once did a member of the Fed's FOMC break ranks and vote another way. And Warsh is like, no, let's do that. We should have dissenting voices. I don't think that's a bad thing. I don't think we should look at that as oh no, the Fed's not in agreement on something. And I think that was the fear, is that's kind of where we've taken things, where the Fed has now become so important that if, we see dissenting votes, that can actually move markets. And so what he's saying is that, no, I think we should have disagreements. They should be vocalized, and we should have competing points of view. That there's that's actually a strong point, right? I mean, that's one of the biggest critiques that we see all the time, right? Where certain industries are all saying the same thing, and it comes across as intellectually dishonest, because that's just not the way it works. And when you have an intellectual debate, there's going to be disagreeing views. I mean, I think the only issue that I've ever seen where economists agree 100% is rent control. It's like the only one. They always point that out. Everything else, they disagree. Even people on the same side. Supply sides can disagree on certain issues. And so Sternberg points out that some of these changes, I think, will actually be a good thing. And yeah, I don't disagree. I think Warsh will be a good pick. I don't think he's going to be a puppet for Trump. If he can find a way to have more faith in some of the data that comes out, that'd be great. And then, like I said, I don't think it would be a horrible idea if people are disagreeing on issues either. So I'm all for it. All right. That concludes the most boring week I think we've ever had. And what's crazy is I did 4 shows. I almost thought about not doing a show today, but I'm kind of glad I did, 4 shows, most boring week ever. Next week is not going to be boring. I will tell you, next week is not going to be boring. A lot to get to next week, but you guys enjoy your Friday. Enjoy your weekend. We'll be back here Tuesday morning for another edition of Wilmington Mortgage. I almost forgot the name of the show. Remember, as always, do not wait to buy real estate. You buy real estate and wait.